Hello everyone. In this particular video, we are going to discuss about the RBI circular for September 2025. So we have already released the part 1. This will be the part 2. We'll be covering all the rest of the circulars. Right, this much we have already covered in the part 1, and from here we are going to cover in the part 2. So let's get the discussion started. The very first circular related to settlement of claims in respect of the deceased customer. If the customer is a deceased customer, how the claims are going to be settled, So it's a consolidated directions that RBI has released recently, right? What is the basic objective? To make a speedy settlement of claims after the death of the customer to reduce the hardship for the family members. That's the main objective of this circular. Why? Because different banks do have different procedure related to the settlement of claims after the death of the customer. So it becomes a huge problem for the legal heirs, or I can say for the nominee, to claim, because maybe a customer can have different bank accounts, and every bank account is having a different procedure of claiming that settlement proceeds. So that's why RBI has inserted this particular circular to remove that kind of duplicacy, or I can say different procedures. So this will be a single short process from now onward. And what is the effective date? The regulated entities, all the regulated entities should follow this not later than 31st March 2026. So by 31st March, closure of this particular financial year, all the regulated entities need to follow this particular circular. So here the applicability will be all the commercial banks, all the cooperative banks. However, there is a particular exclusion that you need to know. The government saving schemes like PPF, right, senior citizen saving schemes, these kind of schemes are not at all required to follow this kind of particular direction, right? So all the commercial banks, all the cooperative banks will be following this direction, except the government saving schemes like PPF and SCSS, right? These are governed by the respective rules prescribed under the schemes. So there is a particular threshold limit that you need to remember, and this will be the most important thing from this particular circular, because I can say 80 to 90% of this circular is all about different procedure that you need to follow rather than certain limits or concepts, right? And usually in your examination, you will be getting question from the limit, date or particular concept rather than the procedure. So that's why this particular threshold will be important. First, we'll be reading this threshold, and then later on, after 3-4 slides, I'll be telling you what is the real use case of this particular threshold. 5 lakh rupee for any kind of cooperative bank, 15 lakh for any other kind of bank, and bank is free to set a higher limit as well. So 5 lakh for cooperative, 15 lakh for other banks. Okay, cooperative banks 5 lakh, other banks 15 lakhs. Please do remember this threshold limit. Very soon I'll be telling you the use case of this particular limit as well. Now there are certain definitions like every other circular. This circular is also having some definitions like account with survivorship clause. Now what do you mean by accounts with survivorship clause? Let's suppose there are two people, A and B, right? A is no more, say for example, A is no more, and the account operation is either or survivor or anyone or the survivor. So that is called as account with survivorship clause. What is the mode of operation? What is the mode of operation of your account? Maybe A can also operate, B can also operate, right? Either or survivor, anyone or survivor. So there are certain modes of operation. It can be only singly operated, it can be jointly operated, it can be either survivor, it can be anyone or survivor. So the accounts with survivorship clause definitely do have a upper hand when it comes to the death cases. Next is the concept of apostille. So basically it's nothing but certification of any kind of foreign document. So if any kind of foreign document is there, if it is certified, then it is a valid document, right? OVD is officially valid document. So Aadhaar, passport, anything as per the KYC master direction, voter ID, driving license, these are my officially valid documents, right? OVD. So guys, the very first thing, settlement of claim in case of deposit account. So it can be a deposit account, like it can be saving deposit, it can be RD, it can be a FD account. All these are deposits. What happens, how the settlement takes place in case of deposit account? So it depends whether your account is having a nominee, whether you have added a nominee. Let's suppose Mr. A is the deceased customer. So whether nomination was there in Mr. A account or a survivorship clause, either or survivor, anyone or survivor was there in this particular account. If there is a nominee, if there is a survivorship clause, no problem at all. The bank just needs to identify the nominee, right? You just need to check the identity of the nominee or the survivor, and a death certificate is required, right? So let's suppose nominee is about to claim the deposit account of the Mr. A because Mr. A is now deceased. So in that case, nominee just need to submit his identity, right? Plus the death certificate of Mr. A. Identity of the nominee and the death certificate of Mr. A is required. If that's a survivorship clause, then the survivor's identity and death certificate of the deceased person is required. That's it, right? Plus there should not be any kind of court order restraining the payment. So there was not legal cases as of now which is pending. Plus it is clarified in writing that nominee receives as a trustee for the legal heirs. So this is a particular concept. I don't think most of the people even know about this concept. Nominee is not the actual owner. Nominee is just a trustee, right? Nominee has the right to claim the proceeds and distribute it in the legal heirs. That's what the legal provision is. The ultimate beneficiaries are always the legal heirs, right? Nominee is just acting as a trustee here. So no need of giving succession certificates or any kind of indemnity bond because you are already having nomination in your account, plus there is a survivorship clause, or maybe there is a survivorship clause. So just the identity verification plus the death certificate of the deceased person will be good enough, right? So if payments are made to nominee or survivor, the regulated entity, say for example, has made a payment to the nominee or survivor after checking the validity after checking the identity of the nominee or the survivor and the death certificate, then it shall be constituted a full and valid discharge of bank's liability. So banks is nowhere responsible now. Bank has done its duty. Bank has done its duty, right? Next one. If there is no nomination, if there is no survivorship clause, then it depends whether the account is crossing the threshold limit or not, whether the deposit is crossing the threshold limit or not. That's why this threshold limit is very, very important. 5 lakh for cooperative banks, 15 lakhs for other banks, right? And the bank can set the higher limit as well depending on the personal judgment of the bank. Correct? The account is not having any kind of nominee, the account is not having any kind of survivorship clause, and the deposit is up to the threshold, 5 lakh or 15 lakh, whatever the case may be. There is a simplified settlement process. No nomination, no survivorship clause, no will is also there, no dispute is also there, no court order restraining any kind of payment. In that case, you need to file a claim in a particular form. You need to give the death certificate of the deceased customer. You need to give OVD, official valid document of the claimant, obviously. Bond of indemnity, disclaimer from the other heirs, plus a legal heir certificate. Legal heir certificate will also be required, or declaration by an independent person is required. Basically, legal heir certificate is the essential document here which is now added. So death certificate, your identity of the nominee or the survivor, right? Along with that, a legal heir certificate will also be required. So these things are more of a process oriented in nature, right? No third party surety bond is required in this case, right? What is a third party surety bond? Basically, this deposit was of the deceased person, and in this account we don't have the nominee, we don't have the survivor clause as well. So what we can do here is the bank needs to be sure that the bank is not taking any kind of risk, right? That's why sometimes the bank asks for a third party surety bond. Let's suppose after a few years, after a few months, a particular person came and started claiming the deposits of the deceased person, that his or her share was also there in that particular deposit. So that's why the bank is already asking for a third party surety bond in some of the cases. Why? Because the bank want to take the bank is not at all the bank is not required to take any kind of liability here, right? The bank doesn't want to take any kind of headache for the future obligation that may or may not arise. That's why the bank is यहाँ पे क्या कर रहे हैं, एक श्योरिटी बॉन्ड साइन करवा रहे हैं. रीजन बीइंग, फ्यूचर में अगर कोई क्लेम हो गया, इफ देयर इज एनी काइंड ऑफ क्लेम इन द नियर फ्यूचर, देन द बैंक इज इन द सेफ साइड, राइट? That's what the basic purpose. So अगर threshold के नीचे है तो definitely requirements थी, but if the claim is above the threshold limit, that in that case there will be some requirement of the additional documents as well. What are the additional documents? You need a succession certificate from court, or a legal heir certificate plus an affidavit by the independent person is required here, right? That's the basic bare minimum requirement if the deposits are crossing the particular threshold, right? And in this case, the bank can also demand a surety bond from acceptable person, right? So the whole idea of surety bond is just to be safe. In case if anything comes up in the near future, the person who is claiming the deposit will be fully liable. That's what the meaning of surety deposit is all about, right? Surety bond is all about. Now, if the claim is involving a will, there is already a will that the deceased person has signed, right, earlier in his lifetime. So, and plus there is no dispute. If there is a will, there is no dispute, then there is no problem at all, right? There is no problem at all. If the will is genuine and undisputed, then it is settled based as per the will. It is settled based as per the will. In this case, no surety bond is needed because already the terms and conditions or everything is clear in the will, right? Some of the other points from this particular circular is credit after the settlement. Let's suppose the account is settled, right? Now, any credit is there in the account. Let's suppose a dividend is deposited in the person of the deceased account. Then the bank needs to return it to the remitter by clearly stating the remark that account holder is deceased now, right? In case of premature termination also, it will be without penalty. In case of death, it is always without penalty, right? And missing person case, let's suppose a particular person is missing and the legal heirs of the nominee wants to claim the amount, then they can do so for any amount less than 1 lakh rupees. Just a FIR plus a non-traceable police report is sufficient for claiming this particular amount, right? Then it comes to locker and safe custody. Many customers do have locker facility as well availed with the branch. So then in case of the deceased customer having a locker, what will be the treatment? Obviously if it is with nominee or with survivor clause, then no worries at all. The nominee or the survivor will be getting the access, plus they can also remove the content, right? If joint heirs with survivorship clause is there, then bank needs to follow the mandate of either or survivor or any one of the survivor. For minor nominee, the content will be handed to the guardian of the minor, right? That is the bare minimum thing that you need to follow here in case of locker facility. If the locker is without the nominee, if the locker is without the survivorship clause, then in that case, a simplified procedure will be adopted, right? The documents required will be claim form, death certificate, official valid document, NOC from the other legal heirs. Legal heir certificate will be required. Obviously, if there is no nomination, we need the legal heir certificate basically. And in case of any dispute, we always need the court document. Only the court document will be accepted here in case of disputes, right? Let the court decide, and then whatever the order the court will be giving, that will be final. So that's the bare minimum requirement, guys, that you need to know here. Now, one more important thing for you guys can be the compensation and the time limit. Let's suppose the nominee or the survivor has submitted all the documents, right? In case of deposit, in case of locker, then the bank is required here to settle the obligation within a time limit of 15 days from the submission of all the documents. If all the documents are submitted by the nominee or the survivor, then the bank is required to settle the claim within 15 days, right? Not later than 15 days. If they are delaying, that in case of deposit, then in case of deposit, the bank needs to pay a compensation of bank rate plus 4% per annum interest for any such delay. Bank rate plus 4% will be the penal charges that the bank needs to compensate this much to the legal heirs of the nominee. In case of locker facility or safe custody, 5,000 rupee per day for any kind of delay. 5,000 rupee per day for any kind of delay. So there are strict penalties. There is strict compensation here, right? Now, next one is our data which was released on 1st of September on the RBI website related to the sources of variation in the Indian foreign exchange during the first quarter of the financial year 2026, April to June quarter of the financial year 2026, So here we can see that the current account balance for the first quarter of 2025 is 2.4, that too in negative, right? So current account deficit balance is in, the current account is in deficit, right? 2.4 negative. We can see the rest of the data as well, in terms of FDI, in terms of the external assistance and so on, right? So there is an increase in the external commercial borrowings. Plus, if we have a look at the valuation change, it used to be 0.4 and now it is 25.3, right? 25.3. So why this valuation changes so much? So they have given the reason as well. The valuation change, the valuation gain is basically reflecting the depreciation of the US dollar against the major other currencies, and higher price of the gold amounted to rupees 25.3 billion. So these were the two driving reasons: depreciation of USD against the different currencies and the higher price of the gold, right? Then the direction is Reserve Bank of India interest rate on advances. So whatever interest rate banks are charging on the loans and advances that they are giving to the customers, right? Let's suppose if I am a regulated entity, I am giving loans and advances to my customers. Whatever interest rate I am charging from those customers, this direction is an amendment direction. So the directions we are already having, there is a slight amendment in those directions that we need to study here. The whole objective is to ensure flexibility, bring transparency, fairness in the interest rate resets whenever the interest rates are reset, and the customer retention strategies by the bank and regulated entities. Because let's suppose my loan is with HDFC Bank, right? Now there is an interest rate reset. I want to shift my loan from HDFC Bank to SBI Bank. Is it possible? Yes, it is possible. Can HDFC Bank do something better to retain me as a loyal customer? Yes, HDFC Bank can now do something to retain me as a customer, right? So this is the amendment direction, can be important for your examination. There are just 2-3 inserted clauses, newly inserted clauses. You just have to have a basic understanding of those clauses. The very first one, the other spread components. Now what is spread? Let's suppose I have taken a loan. Now how the bank has structured this loan, there must be a benchmark rate. Let's suppose 5% is the benchmark rate. Plus on this particular benchmark rate, the bank has added a spread of 3%. So benchmark plus the spread is the total loan interest that I need to pay, 8% here, right? So here we are talking about the spreads, not about the benchmark rate. Here we are more of concerned with the spread. So the spread component may be reduced by the bank for a loan category. Can a bank reduce the spread component? Yes, now they can reduce it. Earlier they cannot reduce it for the 3 years, for the continuous period of 3 years, but now they can reduce the spread for a particular loan category earlier than the 3-year time period as well, just for the purpose of customer retention, because I am rate sensitive, right? I am rate sensitive. If I can see that SBI Bank is charging much lesser spread as compared to the HDFC Bank, I'll shift to SBI Bank, right? I just need to transfer my loan from HDFC to SBI Bank. So now HDFC Bank can also reduce the spread, can also change the spread in order to retain the customer, but it should be on the justifiable grounds. It should not be an act of favoritism. It should be based on completely on justifiable grounds. So that's why it should not be any kind of discriminatory practices, right? It should be a non-discriminatory manner. There should not be any kind of favoritism in this particular thing, right? And there should be a bank policy. This particular thing can be only exercised in the presence of a bank policy. So earlier the bank could change the spread margin, but only after a specified period of 3 years generally. Now they can even do it before the 3 year based on justifiable grounds, no favoritism, plus we want to retain the customer, right? So this is a flexibility that bank is offering to the customers now. Plus at the time of the reset of interest rate, whenever you are doing a reset of interest rate, what was the case earlier? So यहाँ पे पहले क्या होता था, whenever we are resetting the interest rate, the regulated entity shall provide an option. What kind of option? you are free to choose between fixed interest rate or flexible or variable interest rate. So that was an option which the regulated entity must provide to the borrower. You can take the fixed rate loan, you can get your loan converted into the fixed rate loan, or you can continue with the variable loan rate as well. So now ये shall की जगह may हो चुका है. If you can see here, earlier it used to be compulsion, now it is just an option, right? So here regulated entity may provide an option, so now it is at the discretion of the regulated entity. If the regulated entity wish to provide the option, they can do so as per the board approved policy. But if the RE is not at all of the opinion of providing of this particular option, they may not do so, right? So shall से यहाँ पे may हो चुका है, right? So it's not at all a compulsion now. So these are basically the amendments, and the implementation timeline is effective from right now, 1st of October 2025. And I have summarized each and everything for you guys in a tabular format as well, so you can have a quick understanding of each and everything, right? Next one is your lending against gold and silver collateral amendment. This is the first amendment in this particular direction. Lending against gold and silver direction was released in 2025 only, and there is a particular amendment in this direction. What is the amendment? A lender shall not grant any advance or loan. If you are a lender, you will not grant any advance or loan for the purchase of gold in any form. It may be primary gold, ornaments, jewelry, coins, any kind of financial asset. For example, units of ETF, units of mutual fund. So if you are a lender, you cannot give loan to the borrower for buying gold, right? Gold loan is a separately different topic as compared to this particular loan. What is gold loan? I am having already gold. Let's suppose I am having 1 tola of gold. I went to the regulated entity, to the lender. Now what I am doing here is I am putting that gold as a collateral and I am borrowing money. That's what gold loan is all about. That's what gold loan is all about. But here, the lender will not give any kind of loan or advances for the purchase of any form of gold, right? The lender cannot give you money just to purchase gold. That's what the major thing is. Why? Because the gold rally is still on. The gold and silver is increasing like anything in this particular financial year, or I can say from the past 2 years. So that's why what people are doing, they are taking loans and advances and they are buying gold and silver. So here is a clear-cut restriction from the RBI's point, right? Next one. And there is one more amendment here, provided that the scheduled commercial bank or a tier 3 or a tier 4 UCB may extend a need-based working capital finance. So here SCBs, tier 3 and tier 4 UCB may extend a need-based working capital finance to a particular borrower who uses gold or silver for raw material purpose, right? Let's suppose I am making something out of gold or silver and I am selling that particular product, right? It can be semiconductor, it can be jewelry, it can be anything else. I am using gold and silver to manufacture a particular product. Now for gold, for me is not at all an investment. It is not for speculative purpose, it is not an investment, it is inventory, right? It is my raw material. So I can ask for a working capital loan from a scheduled commercial bank, from a tier 3, tier 4 UCB to buy that gold, because that for me is always a raw material and not an investment or speculation, right? So working capital loan is fine because gold is my raw material. So these are the two updates that you need to know, right? Next one is related to your Basel III capital regulations related to perpetual debt instrument in the additional tier 1 capital. So we all know that PDI's perpetual debt instrument is a part of your basically additional tier 1 capital, right? What is perpetual debt instrument? It's nothing but a fixed interest bearing security because it's a debt instrument and it is perpetual in nature. That means I need to never redeem it. I just need to pay interest on it always, right? Because it's perpetual. So what kind of addition which is being stated here is, and you need to remember this one, can be very, very important for your examination. PDIs issued in foreign currency. If this PDI is being issued in foreign currency or even in the rupee denominated bonds, but overseas, So if you have issued this in foreign currency or even in the rupee denominated bonds overseas, shall be eligible for inclusion in the AT1 capital. You can include it in the AT1 capital, but there is a maximum limit. Calculate your risk weighted assets, and 1.5% of your risk weighted assets is the bare minimum, maximum limit is the maximum limit of this particular kind of PDI. So if this is a perpetual debt instrument which is issued in foreign currency or rupee denominated bonds overseas, can you include it in AT1? Yes. In AT1 you can include this, but there is a limit. What is the limit? Your risk weighted assets ka 1.5%. 1.5% of your risk weighted assets. That's the bare minimum limit here. That's the maximum limit here, right? That's the maximum limit. So please do remember this one as well. Now next one is not a circular, but it's a FAQ which was posted on the RBI website, but I feel that it can be important for your examination. That's why I've included this one as well in this particular circular related class. Interoperable regulatory sandbox. We all know about regulatory sandbox. What is a regulatory sandbox? It's an environment where you can do live testing of different products, that too in a controlled environment with following relaxed regulatory norms, right? RBI is also having a regulatory sandbox. SEBI, IRDAI, IFSCA, they are also having their own regulatory sandbox. As of now, PFRDA does not have any its own regulatory sandbox. So PFRDA is not having its own regulatory sandbox, but rest of the entities are having the regulatory sandbox, right? Now, what is interoperable regulatory sandbox? What is the meaning of interoperable regulatory sandbox? Let's suppose I want to test a product which is related to RBI regulation, which is related to SEBI, which is coming under the purview of SEBI, right? It's falling in the scope of RBI, it's falling in the scope of IFSC. So don't you feel that we should be having an interoperable regulatory sandbox? Yes, we should be having such a kind of thing, right? So hybrid products or services falling under different regulatory ambit of more than one financial sector regulator, maybe both SEBI and RBI, maybe SEBI, RBI, IRDAI, IFSCA, PFRDA, then in that case, you can have a access of interoperable regulatory sandbox, right? So this is nothing but a common window for inventors to test the hybrid financial products or services falling within the particular regulatory ambit of more than one financial sector regulator, right? So you don't have to individually go to each and every regulatory sandbox of different regulatory bodies. Rather, this is a one single shot combined interoperable regulatory sandbox. How this is different from the individual sandbox? Because IORS supports the innovation that requires collaboration between multiple regulators, right? If you go to RBI regulatory sandbox, you'll be getting help from RBI. If you go to SEBI sandbox, then regulatory sandbox, then you'll be getting all the stuff from SEBI. But if the case is of collaboration, then interoperable regulatory sandbox bridges the gap between multiple regulatory bodies, right? So as of now, this initiative is involving the collaboration of all the regulatory bodies, RBI, SEBI, IRDAI, PFRDA, even if they don't have the regulatory sandbox as of now, still they are allowed to participate in this, right? They are part of the interoperable regulatory sandbox in IFSCA as well. And who can participate in the IORS? So fintech companies, financial institutions, regtech startups, and other different innovative products and services which are being offered by different entities can participate in this particular product. Now you will be allowed to test your financial products or services following any one of the financial sector regulator like SEBI, RBI and other different, right? It can be a cross sector product as well. Let's suppose, for example, insurance product linked to banking services. So it's an insurance product. So that's within the scope of IRDAI, plus it's a banking service as well. So it's within the scope of RBI. So it's a combination of RBI plus IRDAI. So that's why we need a interoperable regulatory sandbox, right? So these are the features basically, right? Is there any kind of timeline for submitting the application? No, the applications are accepted on on tap basis throughout the year. Is there any fee? There is no application fee as well. However, for testing under the regulatory sandbox, if any of the PR concerned may be applicable, right? So these are the basic requirements here. Who will scrutinize the LORS application? So preliminary scrutiny will be done by the FinTech Department of Reserve Bank of India. Please do remember this one. The FinTech Department of RBI will be doing the preliminary scrutiny here, right? And the detailed scrutiny will be done by the PR based on the regulatory sandbox framework. The PR will also coordinate with the AR to review the specific features of your product that falls under their particular regulatory scope here, right? Are the foreign fintech entities eligible to participate? Yes, they can also participate. And what is this PR and AR? PR is basically principal regulator and AR is basically the associate regulator, right? So the regulators whose remit the dominant or major features of the product falls. Let's suppose I am launching a new product and it's a banking cum insurance product, but most of the features related to that product are related to banking. So RBI will be the PR here, right? IRDAI will be the AR here, for example. And as of now, PFRDA currently is not having its own regulatory sandbox, so it can only be acting as a AR under the IORS and not as PR, right? So PFRDA will be as of now only the PR. The testing phase duration will be as per the regulatory sandbox framework of the PR concerned. Let's suppose the PR is RBI in my case. So in that case, whatever the timeline of that particular regulatory sandbox of RBI is, I need to follow the timeline of that particular regulatory sandbox for my interoperable regulatory sandbox as well, right? What should I do if my product has been tested under the IORS? After successful testing under this particular platform, the entity may approach the concerned PR or AR to obtain necessary authorization. You can approach the regulatory body for all the authorization, right? Regulatory authorization before the launch of this particular product in the market, right? So these things can be important, and do remember the initial preliminary scanning will be done by the Reserve Bank of India. Next one is RBI has launched a scheme for facilitating the accelerated payouts of inoperative accounts and unclaimed deposits. We are having so many inoperative and unclaimed deposits with the banks. So what we are doing here is RBI is launching a scheme of facilitating the accelerated payout. So basically RBI is giving incentive to the bank for reducing the unclaimed deposits so that the legal owner can claim it. At the same time, the inoperative accounts also needs to be reduced. So this is the slab, a payout and incentive for the different banks here, right? Yeah. So that's all from my end for today, guys. From the September month, we have done all the circulars related to your September month. So thank you so much and best wishes. See you soon in some other video. Bye bye. Take care.